All right. Good day, everyone, and thank you for joining us today. My name is Arafat Balogo, and I will be moderating today's session. For everyone that has joined us so far, we say thank you. We would love to know what part of the world you're joining us from. And in order for us to kindly drop your responses in the chat box, once again, thank you for joining us. And please make sure to stay to the end because today we have a lot to unpack. Right. Um, on behalf of ICO Capital Limited, I want to warmly welcome you all to today's webinar session, which is titled Income to Investment Portfolio Strategies for, today's webinar titled From Income to Investment Portfolio Strategies for Long-Term Financial Security. Today's session is particularly important because earlier this month we celebrated two very special moments, which is the Global Money Week and also the International Women's Day. The Global Money Week seeks to promote financial literacy, and the International Women's Day seeks to it that women and their achievements are celebrated across all sectors, which includes finance and also investment. And in recognition of this special moment, today we are proud to host an all-female panel webinar session. We have our industry-defining women who come around, who are already around, and today they will be sharing, practical insights and also giving us, informed encouragement on what to do with our money, how to make our income work for us, right? And because the truth really is that financial inclusion without investment participation is incomplete. And today we want to bridge that gap. We want to let you know, we want you to be informed, right, that investment is not gender specific. It is not just a man thing. No, it is not. And today we want to let you know that women are increasingly at the center of that transition. So today's discussion will not only address how to move from income to investment, but also how women and indeed all investors can take greater control of wealth creation in a structured and more informed way. So I'll be introducing my delectable speakers for today, and I'm starting with Ogonna Chikuma, who is the team lead wealth management at ICO Capital. You're welcome, Ogonna.
Hi, Arafat. Happy to be here.
Thank you so much for joining us, Ogonna. I also have with me today Brenda Egwakide, wealth manager at ICO Capital. You're welcome, Brenda.
Thank you so much for having me, Arafat.
Thank you for joining us, Brenda. And I also have with me today Aderonke Adekoya, Portfolio Manager at ICO Capital. You're welcome, Aderonke.
Good afternoon, Arafat. I'm excited to be here.
We're excited to have you as well. So just before we begin, I'd like us to briefly frame the environment we're operating in today, because today we see high inflation globally and even in Nigeria. However, it seems to be moderating, right? We also see increasing costs of living pressures. We see the currency volatility, which is impacting wealth preservation in the world today. But it's important to know that there's a growing financial inclusion gap, particularly among women. Historically, over time, women have been underrepresented when it comes to investment participation. Before, they used to say like, oh, the men know how best to handle money. They know what to invest in. They know what to put the money in to gain interest. But today, we want to let you know that women, when we actually, look into the sense of it, they are very much more conservative in financial decision making. And also, it is one thing we've come to see that women, when actually engaged, right, they prove to be disciplined long-term investors. So today's conversation really is not just about investing. No, we are going to be talking more about empowerment through financial knowledge and structured wealth creation. So to all of our listeners that has joined us so far, again, we are happy to have you here. Please be informed. You can drop all of your questions in the chat box, and you can also engage a question and answer session, the Q&A session. Right. So without further ado, I will be moving right into our discussion for today. And my first question will go to Ogonna. Ogonna, my question to you is, from both a general and gender perspective, why is income no longer enough? And how should individuals, especially women, rethink wealth?
Thank you, Arafat. Very important question there, especially in the context of today's theme. Income is very important because it gives independence, but then wealth provides security, financial freedom, and on the long run, you find out that it builds legacy. For women, financial decisions have been historically centered around stability, financial responsibilities, and capital preservation. Whilst these are important, I believe there are more opportunities for financial growth. The reality today is, at first, inflation erodes any idle cash. We see that even when your salary increases, your purchasing power does not increase, and in some cases, it's even less. Secondly, income alone cannot sustain long-term financial goals. So having said that, there must be, and there has to be, a mindset shift. And the shift must be from saving for safety to investing for sustainability. In the past, women have been conditioned to just save your money, don't invest, depend on your partner to make big financial decisions. Having seen this, it limits the opportunities for women to build wealth. But in recent times, we've increasingly seen women take on more active roles in making portfolio decisions, wealth planning, and even intergenerational wealth transfer. So in essence, everyone should rethink wealth, not just women. There has to be that shift from earning a good income to owning investments and assets. Thank you.
Thank you so much, Agonna, for sharing. Sincere apologies for the lighter. Okay. Thank you so much, Agonna, for sharing that with us. I mean, an important fact that I took from your explanation to us is there's the need for mind shift. We have to understand that we need to move from saving just for safety to investing for sustainability, right? Thank you, Ogonna, for that. And that takes me to my next question, which is for Brenda. So Brenda, my question is, what practical steps should individuals, particularly women who are just starting, take to begin investing?
All right, thank you again, Arafat, for having me. And I know your question is directed to people who are already on the journey, but let me also just address those who are yet to start their investment journey. And my message to them would be just start, start small, start from where you are, but by all means, start your investment journey. Now, to those who are just beginning the journey, first of all, I think that I would say congratulations to them on making the decision, to start their investments. I think two important factors to look at will be intentionality and confidence. Now, what do I mean by intentionality? Intentionality is simply have a goal, right? Have a goal. What is the goal of your investment? Is what we would call your investment objective, right? So why do you want to do this? For some women, they want to save towards education. For some others, their savings is towards maybe a trip, relocation, for even wealth creation. Whatever the goal is, it's important that everybody has a goal, an investment goal. And then that helps you in terms of the decisions you make towards your investments, right? And then I spoke of confidence. Now, why confidence? Confidence because the information you have is what will give you the capacity to make the kind of investment you want to make. So it's important that you seek knowledge, right? Seek knowledge, seek to understand the investment environment, seek to understand the kind of investment you are getting into. Now, I'm being careful in saying this as well, because some people all in the name of trying to seek knowledge, have refused to start their investment journey. So whilst knowledge is important, whilst it is important to get information, I think that webinars like this should help you, should be enough to spur you into action. Now let's talk about the practical steps, especially for women who are balancing multiple responsibilities and, handling everything, trying to juggle through different types of responsibilities. We recommend a structured financial planning. Now, what does that mean? You need to divide your income. Divide your income into your living expense, your safety nets, or what you call your emergency funds, and then investment allocations. Now, you can start with managed solutions. So, for instance, you have ICO Capital Mutual Funds, right? You have your income-focused notes, like the guaranteed income notes. And then, of course, there's also the ICO Eurobond funds. Now, you might ask why I'm making these recommendations. It's because it gives you professional management. It also helps you to enjoy diversification, and then it is very easily accessible. The last point I'll make is you want to build consistently, right? Some people start today, tomorrow they are out, next tomorrow they are back, and then before you know it, they're out again, right? If you are not consistent, you cannot get the correct results or the kind of results that you would wish for. So the point I'm making is that the key is not about the size of your investments. It's actually about discipline. So you cannot take discipline out of the investment conversation. So just to reiterate what I've said, right? You need to have the confidence, you need to have the right information, you need to have your investment objective and clearly spelled out. That's in that way you are able to know exactly why you are making your investment decisions. Thank you, Arafat.
Thank you so much for sharing that with us, Brenda. I mean, I agree with you on every point because you've not just told us how to start, you've even told us how we can start, what to start with. You mentioned some of the products here at ICO Capital Limited where we can put our money. You've also informed us that it is important to be intentional first. Then when the intentionality is there, you also have to gain knowledge, know what you're going into. It is not enough to just be intentional. You have to, there's the need to have the knowledge of what you're going into, right? And also stay consistent, because you cannot say, oh, okay, I'm ready today, then tomorrow you're taking out your money, or something came up, or, there's the need for consistency so that at the long run, you will get what you aimed for, right? Thank you again, Brenda, for sharing that insightful thoughts with us. And this will take me to my next question. But before that, to our listeners that have joined us so far, again, please do not forget to drop your questions in the chat box and also to engage the Q&A session. Simon Megida, I see you. Thank you for joining us. Thank you for being here. We're happy to have you. So my next question now will go to Aderonke. Aderonke, so I want us to move to portfolio construction, right? Because there are people that have the money, but they don't know how to begin. They're okay, maybe they are like, how do I build my portfolio? What does portfolio construction entails? So my question is, what principles should guide investors when it comes to portfolio construction?
All right, Arafat. So I would start with a simple question, which is what is portfolio construction? So this is simply when an investor takes a disciplined and strategic process in building a diversified portfolio across various asset classes, such as equities or bonds or money market instruments. Now, in the process of portfolio construction, we usually focus on three core principles. The first of that is preservation of your capital. You want to ensure that your principal is safe. That's the foundation of any investments that you want to do. Then secondly, after you ensure that your principal is safe, you want to move on to income generation. So this basically means that you are earning cash flow on your investments that can fund your liquidity needs from a time-to-time basis. And finally, you want to be able to achieve long-term growth on your investments as it compounds over time. Now, in reality, we see that investors, usually new investors, usually make two mistakes. The first mistake is being too conservative. You see that some investors take so little risk, and the result is that over time, you see inflation start to eat into your investment because you're not earning a return that covers the inflation in the economy. Another mistake that you can make is being too aggressive, and you take uncalculated risk, and then you see that over time there's a possibility that you would lose your investment. At ICO Capital, what we do is that we guide investors in the process of creating a balanced portfolio such that you're not so aggressive, but you're also not too conservative. And then we align that portfolio with the specific goals that you intend to meet. We consider factors like the life stage of an investor. The age of an investor is very important when considering a portfolio that you want to build for a client. You need to consider, is the investor a 28-year-old investor that is just looking to grow their wealth, or is he a more senior investor that has built wealth over years and is just looking to protect that wealth? Another factor that we consider, which is quite important, is your risk tolerance or your risk appetite. We have some clients that are quite aggressive. They want high risk, high reward. And we also have conservative clients that just want to they just want that stable income generation, and they want to preserve their capital. So risk appetite is also an important factor to consider when building a portfolio. And lastly, we look at your liquidity needs. What kind of periodic obligations do you have? What kind of obligations do you need to meet? How do we structure your investments such that on a time-to-time basis, you can get cash flows that match those liquidity obligations that you have? So that's a general overview of the portfolio construction process.
Thank you so much for sharing that with us, Aderonke. So for me, I mean, just now I have learned that when it comes to portfolio construction, we have to take the age factor in. Is the person a young person that wants to build wealth, or an elderly person that just wants to maintain their wealth? You also have to, as an investor, know your risk appetite, right? You don't want to be too conservative. You also don't want to be too aggressive, thereby taking uncalculated risks that will cost you your income, right? Thank you so much again, Aderonke, for sharing with us. Now I want to move to my next question. And my next question is for Ghana. So Ghana, I want us to be more practical here, right? And my question is, how would you allocate an HNI portfolio today? And where do ICO Capital Solutions fit in?
All right, Arafat, let's make this practical. A diversified portfolio today would look like allocating 20 to 30% in fixed income investments. This could mean having treasury bills, FGM bonds, or ICO fixed income strategies in your portfolio. Then we'll allocate 5 to 10% of equities. This could mean having any Nigerian blue chip stock or dividend paying equities in your portfolio as well. Then we'll allocate 30 to 40% in the money market instrument, which have underlying investments or underlying assets in fixed deposits and commercial papers. Then 0 to 10% is allocated to alternative investments, which have real estate, structured notes, private opportunities. Then 5 to 10% is allocated to the FX or dollar assets. You could invest in the Eurobond or the ICO Eurobond fund. From a product standpoint, the ICO Guaranteed Income Note is suitable for capital preservation and, most importantly, predictable income. We also offer discretionary portfolio management services, which provides a lot of options, but a few. Tailored asset allocations, which means your investments are structured to fit your specific goals, risk tolerance, and timeline to achieve your financial goals. Then again, you enjoy active portfolio monitoring. What does this mean? The assets in your portfolio are regularly tracked and rebalanced if need be, just to ensure that it stays aligned to your goals. Then again, you also enjoy professional execution. It means we have trained experts to manage your portfolio, ensure decisions are made strategically, and also these decisions are made at the right time. Thank you.
Thank you so much, Agonna. Thank you for sharing that with us. I must commend you because in just little time, you've not just told us where to put our money, you've also, given us practical precautions on how we can, divide our money because diversification is important in investments. We don't want to have all of our eggs in one place, right? Thank you so much for that, Agonna. Okay, Brenda. So Ogana has just given us an HNI perspective. So there are, people, they are retail investors, they don't have so much, but they're interested. They want their money to also work for them. They want the little to have, the little that they have, they want it to, grow. They want to see it grow. So what can we advise them? So my question to you is that I need you to give us a retail perspective of ICO Capital Solutions, how they fit in.
All right, thank you so much, Arafat. Yes, so just like Ogona has stated, for retail clients, we also have a structure, however, is a more simplified one. So what we do is there's the mutual funds, which is for diversification, and then there is a fixed income product for stability. And then usually there's a gradual introduction to the equity space. Now, the goal for the retail clients really is to make investing accessible without compromising structure. So just like I've said, although the clients are retail, the funds are not so much, right? But we also make sure that they still enjoy a form of structure, which is mutual funds, fixed income, and then a bit of equity in that space. Thank you.
I appreciate you, Brenda, for sharing that with us. I mean, an important fact that stood out for me is that the goal is to make investing accessible without compromising structure. Let everybody have it. Let it not be compromised. There's nothing like, oh, you don't have so much, that's why we can't take your investment. There's investment opportunity for everybody depending on, your income, right? Thank you so much for that, Brenda. Okay, so now my next question is to Aderonke. So Aderonke, I'm of the opinion that there are people that, they keep their money to themselves. They're like, oh no, I've been hearing about investment, different type of investments, right? But I don't know, I don't think my money is enough. I want to, stack it up. I want to keep saving. I just want it to be, huge before I say I want to invest. So for this set of people, what should we say to them? What advice should we give to them? Which brings me to my question. Should investors wait for the right time to enter the market, or is there even a right time to enter the market?
All right, thank you, Arafat, for that question. So one of the biggest myths that you have in investment is that you can pick this perfect time that you want to start your investment journey. You go online and you hear advice like buy the dip or buy low, sell high, and it sounds logical, right? But the reality is that nobody, even seasoned investors, nobody can consistently predict the market. And then what you have is that in most cases, the risk of actually waiting for the perfect time to invest your money is higher than if you are just invested that cash that you have. So what's the smart approach for you to take in investing your funds? Just start with what you have, start where you are, take a phase but you invest consistently over a period of time. You spread your investments gradually and consistently, and you would see that that helps you to reduce that pressure that you have for waiting for that perfect entry point for your investments. It also helps you to reduce your your exposure to short-term volatility in the market. And then I would close on this note. There's a popular saying in the market, which is time in the market, actually spending time in the market is more powerful than timing the market. Thank you.
Thank you so much, Aderonke. Those are the words of the portfolio manager, right? She has said to us to start with what we have. Start where you are. Don't wait for a particular time. There's no perfect time. Just start already. Start where you are. Start with what you have and watch your investments grow, right? And also, she made a very important quote that time in the market is much more powerful than timing the market. Time in the market, which speaks to the fact that, okay, you're timing in the market because your money is there. So it makes sense that you're timing, oh, what fund is growing today, or what is happening in the market today. I mean, it's another way of you monitoring your money, which is best than timing the market. You're timing the market for other people. You want to know what is happening today. Your money is not there yet. So just start already. Start now. Start with what you have and just start, basically, right? Now I want to take my next question, which is to Brenda. So Brenda, most people want to invest, but they do not have ground knowledge on what to look out for or what to avoid. So my question is, what mistakes should investors avoid?
All right, yes, thank you for that question, Arafat, because it's very interesting. We've seen a lot of mistakes that people make over time. And I think the first that comes to mind is emotional investing. What do I mean? Some people just hear about an investment opportunity. It sounds good, looks like everybody is going that way, and then they follow without, seeking information, without getting the requisite knowledge to know whether this investment type, does it suit my investment objective, like we talked about in the beginning, right? So emotionally, people just make investments, and then at the end of the day, they get bonds, and then they say, oh, investing does not work for me. When in fact, your investment was based on emotions, right? Another thing that we have noticed over time is this lack of diversification. Ogbonna has spoken about it. I think I've touched on it a bit. The fact that your funds need to be diversified, right? Now, people put their funds in a particular investment type. At the end of the day, they're either disappointed at the kind of returns they're getting, or because they have invested in a very volatile market, they tend to lose their funds. And then they think that, oh, investment is wrong or investing is a scam, right? But the mistake was just the lack of diversification. And another thing I'll touch on as well is this inconsistent investment habits. I mean, we've spoken about it earlier. You put in your funds today, you want to take it out tomorrow. You are not patient with the process, right? Some people start investment journey with 50,000, and in the next 3 months, they're expecting to have 2 million naira in their accounts and all of that. So when those kinds of investment is not met, they think that, oh, no, investment doesn't work, whereas they have not stayed through the process. Right. And Arafat, one interesting fact, right, and one interesting observation also is that we've noticed that women tend to be more disciplined in the markets. Women investors tend to be more disciplined. But the tricky part of it is that it is very difficult for them to get started. So they delay entry. And that's part of the reasons why we're having a webinar like this today, because there is need to bridge that gap. We need to get our women to start investing and start investing now. Thank you.
Thank you so much, Brenda. And as I'm speaking right now, I'm not speaking just as a moderator, I'm speaking as a female and also an investor, right? I mean, I've learned so much from just the few points that you've given us. Emotional investing. This made me remember the time that the MMM was, rampant, and then a lot of people, because people said, oh, if you put 100,000, you can get 1 million, or you can even get 10 million. A lot of people did that, went into it, and it later, came out to be scam, right? Which is an important fact that we should not just go with emotional investing, because a lot of people is doing it does not mean it is right? It is important for us to gain knowledge, ground knowledge about the particular investment before we fund it, right? Also, there's the need for diversification, right? And also, you have to be consistent in your investment habits. You are not doing, oh, I put in money today, I take out money tomorrow. No. So thank you, Brenda, for sharing this mistakes to avoid to us, because I mean now we know better, right? Thank you once again. I have another question for Ogonna. So Ogonna, my question is, what does long-term financial security look like in today's world?
Thank you, Arafat. In today's world, financial security has gone beyond just having a fixed retirement plan. It is now more about flexibility, resilience, and being in more financial control over your life, no matter what changes. Financial security means getting to the point where your investments generate consistent income. What does this mean? It means the shift from you working just for income to your money working for you. And again, your wealth is protected against inflation and currency risk. Then you can support future generation. In essence, financial security is not just about how much you earn, but how well your assets are structured to ensure that your life choices are no longer limited by money. Thank you.
Thank you, Ogonna, for sharing that with us, right? Because for me, an important fact that I'm holding on to is that financial security is not about what you earn, but how well your assets are structured. Structuring is important. Even with little, your interest can compound. So you just have to be structured with your assets, right? Thank you once again. To our audience, please be informed that you can drop your questions in the chat box, and then you can also engage our Q&A session, right? If you have any questions, please drop them in the chat box. And as we commemorated the Global Week on International Women's Day, our conversation today reinforces a powerful message, right? We're talking about financial empowerment, which begins with knowledge, and it is also sustained through investment, right? There's the need to know. There's the need to know, right? For everyone, whether you're just starting your investment journey, whether you are trying to build wealth as a professional, or you're even managing significant assets, right? The principles remain the same. It applies to everyone. You have to be intentional, you have to be structured, you have to make sure to stay consistent, right? Be intentional, set your mind to it, right? Be structured, right? You're not just, all over the place. Be structured, know what you're aiming for, right? And also stay consistent so that you're able to achieve your goal, right? Here at ICO Capital Limited, we are committed to providing accessible investment solutions. We are proud to support women and all investors in their wealth creation journey, and also we deliver professional portfolio management which are tailored to your goals. We have investment options for everybody. There's no investor that is left out. There's no gender specific when it comes to investment. Everybody is included, right? And we want to encourage you to just take the next step, engage with our wealth management and also our mutual funds team. Right, you can explore solutions like mutual funds, guaranteed income note, and our discretionary portfolios, right? Today you can begin your journey to building sustainable income, building sustainable wealth, building long-term security. It starts today. Just as we close up, I would love to extend gratitude to my exceptional panelists. You guys delivered a lot. You unpacked a lot today. You encouraged us. You told us what to do, what not to do, mistakes to avoid. You told us where to put our money. You told us where to put our money, what to do with our money, how to make our money work for us, right? You also informed us not to just go into a particular investment because everybody is going into it, right? You informed us that there's the need to have knowledge on a particular investment before you go into it, right? So, just as I've thanked my panelists, I'd like for you to, leave us with words today for us to ruminate on, even after today. Words of encouragement that we'll think back and we'll know that, oh, I attended this webinar. Oh, these things I've learned. Have I started practicing them? Oh, I should start now. I shouldn't waste any more time. Even as a female, I know that, oh, I have there are investment options for me. Even as a retailer, there are investment options for me. There's no need to waste any more time. So I want our speakers to, leave us with wonderful thoughts today. So Brenda, please, what do you have for us?
Thank you so much, Arafat. Before I give my final thoughts, I think I saw a question in the chat box. Someone was asking about if our ICO products are available on mobile app and on the web. And the answer to that is yes, there is the ICO Invest app, right? It is available both in the Play Store and in the App Store. And then someone else was asking about if we have dedicated investment advisors for our clients. Yes, we do. If you are an existing client, please do send us an email at accs@icocapital.com if you don't know who your investment advisor is, and you'll be directed accordingly. I think the other questions can be taken by my colleagues. But my final thoughts, Arafat, thank you for that, is this. The best time to plant a tree was 20 years ago. The next best time is now. Start your investment journey now. Start now. Start now. You have no idea how far it can take you. Thank you so much for having me.
Thank you, Brenda, for sharing that with us. The best time to start your investment is now. Now is the best time. There's no need to waste any more time. The best time is now. There's no better time than now, right? Okay. Deronke, just before we take more questions, what do you have for us today? What word are you leaving us with?
All right. So I would say consistency is key. I think a lot of investors underestimate the impact of compounding. There's no perfect timing for you to start your investment journey, and you don't need to have the largest salary. You just need to have steady, intentional, consistent contributions, and then you're on your way to a successful investment journey. Thank you.
Thank you so much for sharing that. Before we have Ogonna share, our final thoughts with us, there's a question from Omoni Temitope. She said, can you share the performance of ICO investment portfolios over the last 3 years? Okay, I would love to direct this question to Aderonke. Aderonke, so can you share with Omoni Temitope and with us all the performance of ICO investment portfolios over the last 3 years?
All right, so I would speak specifically to the mutual funds, which are the public funds. ICO Capital, we have the money market fund, we have a balanced fund, and also an Eurobond fund. And those funds are quite competitive. For the money market fund in particular, we've had an average yield of about 18% for the current quarter. For the balanced fund, last year we were able to achieve a yield of more than 33% year-to-date return on that particular fund, and then about 12% on the ICO Eurobond fund. You can get more information. We publish fact sheets on a monthly basis on the ICO Capital website. That's at www.icocapital.limited.com for more information.
Okay, thank you so much for sharing that. And I'm sure that must have answered Omoni's question. And Omoni, if you want to, learn more, you can just easily access the address that Aderonke has shared with us. I have another question here from Omoni as well. Right. She said that, do we have dedicated investment advisors? So I think Brenda already answered this. So yes, we do. You can, reach out to our team, at our client services team at accs@icocapital.com. They will, give you they'll answer all of your questions and also give you the number of any contact or any wealth manager that you need to reach out to. Okay, just before we go, I want Ogona to, give us our final words.
Thank you, Arafat. For me, it's just simple. Just like Brenda has said, start now. Start now. It's never too late. Be intentional and don't just work for money. Make your money work for you. Thank you.
Okay, thank you so much for sharing that with us, Ogonna. It's given money woman, let your money start working for you. Start now. You've toiled day and night, 9 to 5, or even more than 9 to 5, maybe 8 to 10, you've done so much. You can let your money start working for you, and that can happen today. You just need to start already, right? The webinar has, been very insightful. So much knowledge have been shared today. And we thank you to everyone that has joined us. I am sure that you've taken 1 or 2 knowledge with you today. And I want to advise us, I want to encourage us, yes. Let it not just be a conversation. Let it not just be another webinar. Let it not just be another gathering where you hear people advise you. This is not an aspire to perspire session, right? It is a notion, to let your money start working for you today. So let it not just end as a conversation, but rather let it be the beginning of more intentional investment journey for you as a female, to you as a male, without any, gender specific, without any gender specifics, without any age specific. To me, if you ask me, nobody is even too young. We are not even talking about gender now. Nobody is too young to invest. Start as a girl, start as a man, start as a female, start as a male. Just start already and let your money start working for you. And that brings us to the end of today's session. To everyone that has joined us, I say thank you. To my panelists once more, I say thank you. And to everyone, I say have a wonderful day.